Fantastic. So Matt of Bitwise, would you introduce yourself and tell us a little bit about Bitwise?
Absolutely. First, it's wonderful to be here. Thanks for the partnership over the years and looking forward to continuing to partner together in the years to come. You all are amazing supporters. Bitwise is a specialist crypto asset manager. We've been in the market since 2017, and there are a few things that make us unique. One, we created the world's first crypto index fund, the Bitwise 10, and today run the world's largest crypto index fund. We also run one of the larger Bitcoin ETFs, BITB, which is now well north of $2 billion after only 2 months on the market. But what really separates Bitwise from most other liquid crypto asset managers in the space is that we're built to serve exactly the market you were talking about. We're built to serve wealth advisors, RIAs, family offices, multifamily offices. So much of crypto focuses either on retail self-directed investors or on institutions in the pension endowment space. But as you and I know, there's this huge group of wealth in America occupied by the wealth industry, by financial advisors and family offices. And that's the market that we've been built to serve. We serve thousands of advisors and family offices today. We did 20,000 meetings with family offices and advisors last year as a company. I just got back from a 20-day roadshow talking to exactly that crowd. So we have both statistical data from our surveys as well as boots on the ground data that I can share. As far as my background, I'm the Chief Investment Officer here at Bitwise. I've been with the firm since February of 2018, so 6+ years through multiple bull and bear markets. I look after our index and direct investing strategies. Before joining Bitwise, I spent 15 years in the ETF industry. I was the CEO of ETF.com. I built the world's first ETF data and rating service, the largest ETF conference in the world. And so it's beautiful to see the ETF world colliding with the crypto world. It's my two worlds coming together. And I think it's going to be a beautiful partnership for many years to come. So that's me in a nutshell.
Thanks, Matt. So that's really good background. Thank you very much for giving it to us. I'm going to go a little off script, Matt, before we dive into the survey. I think Alice and I also have quite a long history in ETFs, but I don't think we should presume that everyone on this listening in necessarily knows why ETFs are superior products to many alternatives that are out there. So could you just give us a quick snapshot, really a quick one around the genesis of ETFs, what they brought to the party, and why you decided to launch a blockchain ETF-focused company?
100%. Yeah. So if you think about how investors have been accessing the market historically, originally it was individual stocks. Starting in the 1920s, we saw a boom in mutual funds, which are collective vehicles that you can own a share in, that you can access usually daily through daily liquidity. But 30 years ago, people came up with an ETF. The letters stand for Exchange Traded Fund. And that gives you a window into one of the ways that ETFs are different than mutual funds, which is while mutual funds trade once a day, ETFs trade throughout the trading day like a stock. In fact, as an investor, you buy them and sell them with the same ease that you buy and sell stocks. But really, ETFs have taken off, and they've gone from zero to about $7 trillion in assets over the last 30 years in the US. The fastest growing investment product in America is they have three big advantages over traditional mutual funds. The first is that they tend to be lower cost. An easy way to think of ETFs is they allow every investor to access investments at the same fee that the largest institutions in the space pay. So if you think of what the Harvard endowment was paying for S&P 500 exposure or Bitcoin exposure, now everyone can access the product at that same fee. That's the beautiful thing. They're also more tax efficient and tax fair than mutual funds. They don't tend to create capital gains distributions that you have to pay even though you're holding for the long term. And that's a beautiful thing. And then the third killer app is that they're just massively distributed. Everyone who has a brokerage app, everyone who can buy a stock, can at some point access these ETFs. Now, there are restrictions we'll get into at things like Morgan Stanley and large wirehouse platforms, but broadly speaking, ETFs are broadly available. So cheaper, more tax efficient, and easily accessible. And if I can, I'll just share one fun little story. Um, a lot of people ask me why I got into crypto. And one of the reasons was I saw the evolution of ETFs. ETFs were a disruptive technology. When they launched on the market, everyone was skeptical of them. There were actually congressional hearings about whether ETFs were destroying the American entrepreneurial dream. The Financial Times labeled them weapons of mass destruction. But they went through this giant boom, and I could see why, because they were more efficient, they were faster, they were quicker, they were better, they were more inclusive. That sounds a lot like crypto. People very skeptical of it, a disruptive technology, but you can see the underlying technology of blockchain is just so much more efficient, more inclusive, more forward thinking. I think it's going through the same path. So there's my ETF primer.
Yes, thanks, Matt. And let me just add one thing to that, because when we did the strategy project in the 90s for BGI around what at the time were called webs, what we did, one of the things that Lee Cranefuss actually asked for, who was the BGI executive responsible, was that we took all the webs, send them to Morningstar, and had them rated as if they had been retail products. At the time, they were institutional only. They all came back as 5-star Morningstar products. The reason for that was what you just mentioned. Instead of 3% loads and very high annual costs, they were operating down at maybe 50 basis points, and that extra 2.5% was in the return. So they were high performing. And I believe the capital has flowed ever since to ETFs because they are higher performing.
Mm-hmm.
That's true of blockchain and Bitcoin too. The performance does speak for itself, but what's different is the capital is only now showing up. So I think that gets us now to the survey results. You do hold probably the most important analysis and survey annually of the space, the RIA Wealth Advisor space. And I would very much like you to just outline, who do you survey and what categories of wealth advisor do you look at?
Yeah, absolutely. We've been doing this for 6 years, which is really fun. It's hard to have long form data in crypto, but we have it here. Every year we've asked more or less the same questions. We ask it broadly of the wealth space. So we get significant responses from independent RIAs, or what you might call abroad IFAs, but independent financial advisors. We get significant responses from brokerages, wealth managers. We get responses from family offices and what we would classify as institutional investors. There's some nuance in there, but those are the big 4 categories of wealth. And we capture them all and sort of disambiguate them within this survey. And we get hundreds of people to respond. It's really a phenomenal thing.
And so then just before we double click into the details, what are the big so whats that you would call out? I believe you did the survey at the end of last year, published it December or January. What are the most important so whats that you would like to call out? And then we
Yeah, absolutely. It's right. We did it in November and December and published it in January. I'll tell you one stunning one was only 39% of the advisors said they expected a Bitcoin ETF to be approved in 2024. And this was literally weeks before the Bitcoin ETFs launched. I think that tells you a lot about what we've experienced over the past 2 months, figuring out that the Bitcoin ETF wasn't in fact priced into the market, that people were not expecting these flows. It couldn't have been priced in the market if what I believe is the target market of the ETF actually didn't know it was coming. Now, you and I probably did think it was coming. That was widely publicized within crypto, but advisors who don't spend all of their time on crypto just presumed we had had 5 years of rejections, 10 years of rejections. Why would that change? So that was one of sort of the stunning findings that we had in there. I'll give you a couple more. Even though this was during a relatively quiet period of crypto, right? Crypto has really exploded and blockchain has exploded into the public imagination over the last few months. It was a lot quieter last year. Still, 88% of advisors that we surveyed had received questions from clients about crypto in the past year. And I think that's a really important note because whether you are pro crypto or neutral or anti crypto, it shows that you need to be informed about crypto and blockchain. And we found that as well. A few other things that I would call out. The vast majority of advisors that we surveyed were not yet allocating to crypto and client accounts. It was only 11% that were allocating to crypto and client accounts. And that just meant allocating to one or two accounts. It doesn't necessarily mean across your book. So the majority were getting questions. A large number were considering it and planning to allocate in the year ahead, but a small minority had allocated before the ETF. If you put all those things together,
Right.
that tells you that we're going to see a lot of money flow into Bitcoin and Bitcoin ETFs specifically from this important category of wealth in America.
Fantastic. And of course, the whole world just changed because, at least for the US, we had the Bitcoin spot ETFs approved. It turned out that collectively they're the fastest growing and most successful ETF launches of all time. The amount of capital that has flowed into them has been remarkable. And so now, if you could bring us up to today, Matt, what are you hearing from the wealth advisors? How many of them are now allocating? Is it over, or are they still yet to come on board? What does it look like from your vantage point?
Yeah, I think it's just getting started. I mean, you're absolutely right that the amount of assets that flowed in have been remarkable. It's been the fastest growing ETFs of all time collectively, and even individually. The BlackRock ETF, which is the largest, is the fastest growing ETF of all time. Our ETF from Bitwise, a small, relatively small asset manager, is growing faster than the first gold ETF grew. So there's been a remarkable adoption. But I would argue it's just getting started. And, there are a couple different reasons for that. One, and I don't know that everyone understands this, is just because the SEC approves an ETF doesn't mean that everyone can buy it. Independent financial advisors can buy it, but wealth managers at firms like Morgan Stanley, UBS, Wells Fargo, et cetera, they can't buy it until their own internal due diligence team approves it. This is not unique to blockchain and crypto. This is true of every ETF. That's just how it works. You need sort of two keys to turn before everyone can buy it. So there's a whole class of investors and money that can't access it. And then even for the advisors who can access it, you have to think about the process that they go through. Crypto's so used to working on a minute-by-minute, 24/7, 365 paradigm. But let's imagine that you're a wealth manager in the middle of America and you see the Bitcoin ETFs launch. Probably you're going to watch them for a period of time, see how they perform. Then you're going to set up your quarterly call with your clients. Then you're going to have the discussion with your clients, and then maybe you'll start allocating. And that's just a multi-month process. Again, nothing unique to crypto and blockchain, just how ETFs work. It moves on what we would see from the industry as a glacial time frame, but it's moving pretty fast compared to other asset classes. So, I think we're going to see strong flows through the rest of this year. I think the flows next year are going to be bigger than this year. And I think the flows 2 years from now will be bigger than the flows next year. So I think we're on a staircase upwards in terms of flows into these funds.
Fantastic, Matt. So obviously there's implications of what you just said, which we're going to double click on in a second. But just to build the understanding, and in fact, a question just came in from an audience member. Give us a sense of those lead times. So at Bitwise, I know that before the Bitcoin spot ETF launched, you had 1,200 or something like this RIAs, and it had taken you a long time to get to that number. What's the lead time? If there was an RIA today saying, or an RIA firm saying, we want to kick off a Bitcoin spot ETF due diligence process to get it on our platform so that then we can offer it to our clients. How long does that take?
Yeah, well, I'll tell you, before ETFs, it took more than a year, right? Typically, the process would be you meet with an advisor, they would study the space, they would ask you questions. That due diligence process would take maybe 6 months. Then maybe they would allocate in their personal account. Advisors like to kick the tires before they put clients at risk. They would watch that for a quarter. And then they would allocate on behalf of one or two clients who would ask them about Bitcoin, please get me exposure. And that would they would watch that for a quarter or 2 quarters. And then if everything lined up, they might allocate to all their clients' books 12 to 18 months after that first initial period. As you mentioned, Bitwise grew from zero to $1 billion in asset under management before the ETF launched. That took 6 years. We're now well north of $3 billion. So it's inflected upwards. So what does it mean now? I think many of the professional investors who have bought the Bitcoin ETF already, and to be clear, it's not just retail buying this ETF. We have advisors buying our ETF. We have some of the largest and most sophisticated family offices buying our ETF, folks with $50, $100 billion in assets under management. We have our first corporate client buying our ETF. We have venture capital funds buying our ETF. So they are in, but the people who are buying it today are people who started their due diligence before it launched. If you're just starting your due diligence now, it's 6 months until you make an allocation, at best. Advisors don't want to lose clients. They don't want to do anything foolhardy. They're willing to take the time. So I think you're looking at, at least a 6-month lag, even if you're eager, if you didn't start already before it launched.
Okay. Thanks, Matt. So then double clicking on the implications. So let's assume that you're correct, that there's a very large wealth pool out there that is managed by intermediaries, RIAs, wealth planners, advisors, etc. And some of them are kicking off a multi-month process to even let the front end of their clients have access. Some of them may not have even kicked off that process yet. That sort of applies increasing demand. And one of the things we know about Bitcoin is that it's capped 21 million, that the marginal rate of issuance is declining every halving. And we already know that so far year to date, the ETFs have absorbed 10 to 15 times more Bitcoin than is getting created in terms of the mining activity. It may even be more by now, I'm not sure. So what does all of that mean for price?
Yeah, it means good things for price, I think is what it means. I mean, look, to be clear, I don't think it's a straight line up. I think there's a chance that ETF flows sort of pause. We captured the initial excitement. There may be a slowdown before we get this sort of long-term, really significant tail after people do their due diligence. But it means there's not enough Bitcoin to go around. I think persistently for the next handful of years, maybe forever, ETFs are going to acquire more Bitcoin than is mined. And what that means is that they need long-term investors to be willing to sell. If you want to think about what's happened to the Bitcoin price since it launched, I think it's pretty clear. After some initial short-term moves, it rallied right up to the all-time highs. And that makes behavioral sense to me, because if you need long-term investors to sell, we're all humans. It makes sense that some were targeting all-time highs. I think the next sort of step in the ladder where we'll reach a new level of liquidity and see significant sales is probably at $100,000. But I think the way to think of it is supply is fixed, new supply is falling with the halving, and we have a new demand shock. So maybe for the first time in history in a commodity, there is a demand shock and a supply shock at the same time. And investing is hard and complex, but sometimes it boils down to simple things. And I think the simple thing here is more demand, less supply, and that's good for prices.
Right. Thank you. Yes, I mean, these are just back of the envelope numbers, but we have about, 5.5 million millionaires in America. 5.5 million. So if each one of them wanted a very small number of Bitcoin, they'd quickly max out the 21 million supply. We actually have about 10,000 people who have 100 million or more in America. 10,000, 100 million or more. And at the current price, those people could easily absorb all the Bitcoin that's available. So there's sort of a demand supply mismatch. But on the other hand, we've said the whole day long here at BlockTalk, we're not making any projections, forward-looking statements, and all of this is educational. None of this is investment advice. Matt and I are just simply expressing our personal views. But so now let's go on to what does this mean for Bitwise? So you have launched a Bitcoin spot ETF. I know it's not the only product that's on your roadmap. Could you just share some of the other things you think you're going to bring to the market that might be attractive to the RIA and wealth advisor community? Or maybe you already have the products and it's just time for the audience to know more about them.
Absolutely. Yeah, really appreciate it. What Bitwise is trying to be is the go-to crypto solution for financial professionals, whether that's educational content or product. I think the Bitcoin ETF is very attractive. Another ETF that we offer that I think is interesting from a philosophical perspective in terms of allocating to this space is a crypto equity ETF, which we've had on the market for 2 years. There's a lot going on in crypto, much of which can be expressed through direct asset holding, but some of which can only be expressed through company holdings. If you're super bullish on stable coins, you can't buy a stable coin and expect it to go up. That's not what they do. But there are companies building in that space doing very interesting things. So I think an equity component to pair with a public asset component, whether that's public equities or private equities, which are equally interesting and maybe even where the most dynamism is right now. I think that's an important thing for investors to keep in mind. In terms of what else Bitwise is looking at down the road, we've filed for a Ethereum-based ETF. I obviously can't talk very much about our filing specifically, but broadly speaking, I think you can assume that crypto is moving into an ETF era. And we have Bitcoin. I think there's a clear line of sight to Ethereum. There's probably a clear line of sight to a blended portfolio. And a few years down the road, as you were just talking with Nick and Matt about, there's a line of sight post-legislation to multi-asset, which ultimately I think is going to be the most attractive area of crypto at all. If you remember, Bitwise started as an index manager. Now maybe we're best known for our Bitcoin ETF. I think there's a good chance that we'll return to being primarily an index manager because I think that's a great solution for a lot of people. So I'm excited to do that. We can dig as far as you want. We have plenty of other ideas that we're working on. But opening up this ETF space to advisors, I think, is a really important part of what we're doing.
Okay, thank you. So just explain a bit more. When you say multi-asset, or are you talking about crypto products blended together into indexes and so on? Yes.
That's exactly right. If there are plenty of people with very specific views on individual crypto assets, people who are Bitcoin maximalists, Ethereum maximalists. I don't know if you can say Solana maximalists, but there are people who have very specific opinions. But many of the clients we speak with, financial advisors, for whom crypto is 1 to 3% of their portfolio, they don't have enough time to have a specific opinion. They just want exposure. Maybe they remember the early days of the internet, and maybe they bought pets.com and not Amazon, and they don't want to repeat that experience. They just want broad-based exposure. So our flagship product is a broad-based crypto index fund, holds the 10 largest assets while screening out assets that we think have significant risks that aren't compensated in the market. You can think of it almost as an S&P 500 of crypto. I think that would be very attractive. You can't currently do it in an ETF wrapper. You can only do it in an OTCQX traded trust, sort of a la GBTC. But I think eventually you'll be able to do that in a ETF wrapper. And I think that will be hugely exciting for a large number of people.
Thank you. The other thing that we've heard a lot about when you talk about multi-asset is the blending of Bitcoin and the Bitcoin ETF into other diversified asset offerings. And so I know that both BlackRock and Fidelity at this point have said that they will add Bitcoin into other diversified asset class products as an allocation. Could you just talk a little bit about the magnitude of what that might mean?
Uh, yeah, it's absolutely massive. And you're right, it's already happening. Up in Canada, where they've had Bitcoin ETFs for a while, so they've been tested. Fidelity's blended funds, right? The ones that own stocks, bonds, etc., have between a 1% and 3% allocation to Bitcoin. This would be a complete game changer for crypto because those are the funds that do two things. One, they get regular continual investment. If you think about your 401k or your IRA here in the US, you invest in that every month, regardless of whether the market is up or down or sideways. You just want broad-based exposure to the market. So 30 years from now, you have something that you can count on as a nest egg. And if you had crypto as part of that mix, and all the academic data suggest it would be a strong addition to that portfolio based on historical returns, um, the continual inflows and the size and scale of those inflows would be absolutely massive. I'll throw this number out there, not saying we're going to get there, but globally, the asset and wealth management space is a $100 trillion space.
Yes.
1% of that is $1 trillion. We've gotten so excited about $12 billion flowing into Bitcoin ETFs. That's 1% of $1 trillion, right? There's still this massive other space. So if you could unlock this asset allocation space, I think you would see a huge amount of flow. I think you would drive down the volatility of Bitcoin because it would be continual flow with rebalancing. And I think it would further push Bitcoin into the mainstream. So we're going to get there. It's going to be exciting. It's going to be a game changer.
Great. Thanks, Matt. I've only got two more questions, and then we can turn off the recording and switch over to Q&A. One has to do with the Ethereum ETF. So you already mentioned to us that you have an application in process. You said you can't speak much about it. Is there anything you can tell it? Well, let me just generalize the question. What are the arguments for and against an Ethereum spot ETF?
Yeah, great job generalizing the question so I can answer it. That was well done. The argument in favor of it is the same one that was in favor of the Bitcoin ETF, which is that we have a regulated Ethereum futures market. We have Ethereum futures ETFs on the market, and spot Ethereum is very highly correlated with Ethereum futures. So if the SEC is going to allow Ethereum futures ETFs, it would be arbitrary and capricious not to allow spot-based Ethereum ETFs because they track the same prices and they trade with extremely high correlations. That's what won the Bitcoin argument. And I think it is also true in the Ethereum space. The things that are different about Ethereum that the SEC could raise questions about, the futures has a shorter track record than they did in Bitcoin. Now, it has enough track record, in my view, to be established, but it has a shorter track record. The SEC, as Matt and Nick were talking about, has been unclear around whether Ethereum is a security or not. I don't think that that should be a blocker to the ETF because they have allowed Ethereum futures ETFs. Again, I think it's arbitrary and capricious to separate those two, or would be. But I'm not a lawyer, and so the SEC may have a different view, and it may be well argued. But those would be the two primary differences, is the duration of the data and then this question of security status. There's probably a third one, which is if we have an Ethereum ETF, can it stake its Ethereum and earn a yield? But that's almost a add-on, right? We could have an Ethereum ETF that doesn't stake, which is my base case of where we will get. And the question of whether you can stake or not is almost secondary to that.
Got it. Got it. Thank you very much. So then, Matt, when you look ahead for the rest of this year, and I guess if one of the people listening in is already an investor in Bitwise or, might one day want to be, what is it that we should all focus on in terms of the key events or catalysts that are going to both drive the blockchain space, but also drive Bitwise's success? What should we all be focused on?
Yeah, absolutely. Within the broader blockchain space, I would be monitoring flows into the ETFs as a sign of institutional adoption. And of course, we're going to get more data on who's buying these ETFs. You have to publicly report if you're a large asset manager within 45 days of the end of the calendar quarter. So by May 15th, we'll have our first view. If you see more professional investors, as I think you will, I think that's a good sign. So flows and types of investors. Then more broadly for the blockchain space, I think we're at the cusp of a massive adoption of a number of real-world use cases, and I think we'll be monitoring that as well. From Bitwise's perspective, it's important to see Bitwise continue to do exceptionally well in this Bitcoin ETF race. We are holding our own against firms like BlackRock and Fidelity. We think it's important to the world that there is a large crypto asset manager that cares dramatically about crypto. As an example, we donate 10% of our gross profits from the ETF back to Bitcoin core developers. So a way to monitor how Bitwise is doing is, do we continue to build a robust niche or space within this public asset race? Do we continue to be competitive, not necessarily equaling BlackRock? It's hard to match a firm of that size and stature and reach, but do we continue to have billions of dollars in our ETF? If that's true, then I think we're well on our way to being one of the largest crypto asset managers in the world. And I think that's going to be a very, very valuable place indeed.
Great. Well, so I'm going to, at this point, Matt, thank you very much for everything you've done for Bitwise. We're excited to be investors through our funds as well as directly. I'm going to ask Philip to turn off the recording.